Jake Claver shares a story here about ultra high net worth people starting to come into the crypto market, especially into XRP, with 99.9% of the world not owning any XRP. You start to wonder what the next 100 to 200 million people entering the digital asset space over the next few years, what are they going to do to the remaining XRP and other crypto assets? I wanted to get into this as well as give you a ton of additional XRP news that is happening. But first, let's go ahead and start with the story. I thought it was worth highlighting here.
I'll tell you a story that I was told not too long ago. This is a good friend of mine. I believe him nameless. He has a cousin that's a Uber driver, and he picked up this affluent family. You could tell that they had money just by the clothes that they were wearing. And he's driving back to the hotel in Orlando because they were at Disney World. And he gets to hear him talk a little bit in the back seat, and he starts to talk to him a little bit. I don't even know if I should say the name of the family. It's a well-known food brand that you would know. You have eaten some of their singles in your lifetime. They have a substantial amount of XRP. A lot of these people that you just mentioned are starting to wake up to this fact. We've had conversations recently with some very large family offices that have started to make significant allocations. There's only 7 million wallets, 7.4 million wallets on the XRPL. If you're here, do you know how rare that is? Like, there's 8 billion people on the planet, and there's only 7, we'll call it 8 million wallets. There's 8 billion people on the planet. There's 8 million wallets. How many Bitcoin wallets are there? There's a lot of Bitcoin wallets at this point. A lot of people own Bitcoin. Not that many people own XRP. Half those wallets are less than 100 XRP. Not that much XRP. It might be one day. Post-price appreciation could be a lot of money. But anyway, the other thing is, people that have already made a bunch of money, do you know what their primary objective is? It's return of capital, wealth preservation. They're not going to take exorbitant risks or, roll the dice on things with significant amounts of money to put themselves in a position to lose. You should only have to get rich once, okay? And they understand that. So this whole asset class is still risky to them. It's the Wild West. They're not even going to look at it. 62% of family offices have no allocation nor intention of making an allocation to crypto. 38% of family offices, $16 trillion globally out of the 10,000 plus family offices. There's 4 trillion of that are even looking at this asset class. Maybe 5 trillion out of 16. And those are the people that made their money through high risk return, investments by starting companies or, doing something very lucrative in order to be able to generate, $1 billion exit. If those people aren't willing to do it, and people, again, the people that have the money, they don't care to risk it. They've already made their money. So that's why, there aren't more, but there are starting to be. I'm literally having a lot of conversations here recently because they see it as a hedge against the losses that could potentially come from the reverse carry trade because of a lot of the information I've put out. Those are the conversations that I'm having now. It's not about, I'm going to make a bunch of money. It's how do I preserve my wealth and use this as a uncorrelated bet that it's going to hedge against the losses that I'm going to see from this other stuff unwinding. They're not dumping all, $1 billion that they have into XRP. They're preserving their wealth. And I think that's a mindset shift that a lot of people are going to have post-price appreciation. And again, sorry to get on a soapbox here for people, but, rolling it all on one thing, I view wealth creation and wealth preservation like a tree. You're going to plant a seed. You're going to water that seed. That's all you're going to do for 5 years, 6 years, 7 years. And that tree is going to grow. And it's going to have a big trunk that's the core thesis of your investment, whether that's your business or an investment or some other way to be able to generate substantial value in society. That's the core, the trunk. It's going to grow big and tall, and it's going to bear fruit, and it's going to spread out when it bears fruit. Okay, you're going to have all these branches, and that's your diversification into other stuff to be able to hedge losses. If one side of the tree gets hit by lightning, this tree still lives because it's, got branches in other sectors, okay, that are going to continue to persist beyond just this one part of the tree dying. If it gets a fungus, there's a bunch of things that could happen, right? But that is wealth preservation at scale. Is you've generated, your core is still there. You still have a big, strong trunk and maybe a significant allocation in one area, but you have branches that branch off into a bunch of other areas in case part of the tree dies. So hopefully post-price appreciation, you're not going to roll the dice again. Like I stated earlier,
Hopefully we all have pretty strong trees, and if lightning strikes, maybe the tree doesn't burn down. Jake's talking about here about he's having conversations with high net worth individuals, and those high net worth individuals are worried about the carry trade unwinding, the stock market, going down substantial amount, maybe the bond market having some issues, and they're using assets like XRP as a hedge against that risk. And they're not putting all of their wealth into XRP, but they're using XRP, Bitcoin, and other assets as a hedge against all of these other things like inflation, as well as what could happen globally. And so I think there was some value there. The tree stuff got a little okay. But anyways, I just wanted to share that with you, and I wanted to also take a look and show you these numbers. Roughly 7 to 8 million XRP ledger accounts exist, but the number of actual people who own XRP is likely meaningful lower, in the lower millions range. That puts it well under 1% of the world's population holding XRP, meaning well over 99% of people don't own any. And so, we're looking at these wallets, and if you have an account on multiple exchanges, if you have multiple ledgers or multiple decents or multiple wallets, you could own 5 or 6 of these wallets, right? So, if 2 million people own 3 or 4 wallets, that makes up how many people globally own XRP. I'd roughly put that between 2 to 3 million people, probably closer to 2 million at this point. And we have, what is that? Like 1 out of 20 every XRP holder, or 1 out of 10 every XRP holder of people. All right, let me show you this. Roughly 7 to 8 million XRP accounts exist today, but the number of actual people who own XRP is likely meaningfully lower, in the lower millions of range. To put that, it is well under 1%. XRP wallets in existence. Finbol's H1 2025 report data shows XRP addresses grew to about 6.28 million to about 7.12 million between January 1st and June 30th, 2025. Later reports in Q4 2025 describe ongoing spikes of new accounts activity, with tens of thousands of account set operations in short windows, which indicates a total count moved beyond about 7.1 million. So Jake said it's roughly about 7.6 roughly. Let's just use that number. And then how many people likely own XRP? In 2025, Rich List style analyst noted 100,000 wallets hold at least 10,000 XRP, representing a smaller but more influential subset of holders. Exchanges and custodians aggregate huge numbers of end users behind a relatively small number of on-chain addresses. So on-chain addresses counts miss tens of hundreds or thousands of custodial users per large platform. Also, you could own multiple wallets. Like I have Ledger and I have Decent, I have Zamin, I have Coinbase. Like there's so many, right, wallets that I personally have that have XRP in them, because I have that spread out just in case something happens to one of those wallets or one of those exchanges, and I just want to say here, looking at these numbers, if we use 7 million, world population is about 8.1 to 8.2 billion, roughly 0.06% own XRP out of everybody in the world. So this is not a well-known thing. You are different for most people that you meet in your life. They don't have access to these assets because they don't have the information that you have. That we are about to go through this revolution in our financial system, and XRP and these other assets are going to be used on a scale that we can't even really comprehend yet, right? Imagine all of the world's financial transactions, hundreds of millions of transactions, billions of transactions a year, all happening via blockchain rails. That is what we're talking about. Moving tens of trillions, hundreds of trillions, maybe even quadrillions of dollars in value per year on something like the XRP ledger and other assets like Ethereum, Solana, and I was going to say Bitcoin, but we know there's not going to be many transactions on Bitcoin. And then I also wanted to take here, I'm doing a video on Ripple escrow to really help break that down for you, so you understand, where all this XRP has gone, who has it, this and this. And it looks like Ripple unlocked 1 billion XRP and then relocked 700 million. So we've seen this over and over again. Last year, Ripple would unlock 1 billion XRP and roughly 800 million would go back into escrow. We are still seeing that only 30% of XRP is actually used to do stuff, and the rest is relocked up. And so look out for the same video. When this video releases, you should see the escrow video the same day. I'm going to go through a ton of information to really catch you up on all this. All right. Ripple has been building the internet of value since day one. Moments like this prove it. Let me play this.
Actually, today I'm very, very excited to announce the CIMB, which is the second largest Malaysian bank and fifth largest ASEAN. They joined RippleNet and is going live with their new innovative remittance service called SpeedSend.
Yeah.
They partner with Instagram.
With Instagram, yeah.
Yes, and now initially they are sending payments from Malaysia to Australia by expanding into 15 different markets using Ripple's technology, real time. So those innovative banks like CIMB is building applications on top of our kind of plumbing and infrastructure.
It sounds like Ripple is expanding at breakneck speed. I don't think people really understand how big this is going to get. At the same stage, Emmy announced that a new Ripple partnership with Malaysia's Universal Bank CIMB, expanding RippleNet deeper into Southeast Asia. You also have a good connection with Ondo here. The institutions behind trillions are converging to the Ondo Summit. I'm going to bring you a ton of updates from this because we're going to get a lot of information about what's being done currently in the background with our financial system. You're going to have Citi, SWIFT, DTCC, Invesco, Fidelity, Pantera, Moody's, Coinbase, Bloomberg, Broadridge, JP Morgan, S&P, State Street, WisdomTree, Goldman Sachs, Bank of America, Societe Generale, Franklin Templeton, and McKinsey and Company. What I want you to see here is all of these institutions are the largest institutions that we know in the world today. And all of these institutions understand how important a tokenized future is. And we're just going to have a lot of really good information coming, and I will bring it all to you. And so Reese Merrick, he is the Senior Executive Officer, Managing Director of Middle East and Africa, put this out. Ripple's got a new partnership going. RedOutPay, a global stablecoin-based fintech company, today announced a partnership with Ripple, a financial technology company that offers crypto solutions for businesses to extend its stablecoin capabilities, payment capabilities. In tandem, RedOutPay is launching its Send Crypto, Receive NGN, its Nigerian currency feature, and the expansion of a multi-market payouts through the integration of Ripple's cross-border solutions. The new feature streamlines conversion from digital assets to NGN for verified user and local bank accounts, enabling faster, more affordable payments, delivering near-instant, cost-effective NGN payments in a significant milestone, said the Michael Gao, CEO and co-founder of RedOutPay. RedOutPay is building stablecoin-powered payments to make digital assets as easy to use as local currency, where users can send XRP or stablecoins securely and receive NGN within minutes. The integration of Ripple payments will expand RedOut's global reach and better serve evolving needs of our users, and will remain focused on making digital financial accessibility. Now, what I want to show you, the competition here for RedOutPay, if the competition for RedOutPay is not offering these crypto services and stablecoins, obviously they are going to gain more market share. It also puts pressure on every other competing business in this same ecosystem, in this same part of the country, to follow suit. If not, they will be replaced. Currently, global remittances remain costly and slow, with average fees around 6.49% and settlement times often taking 1 to 5 business days. Amidst this inefficiency, the demand for digital alternatives has accelerated. Chainalysis reported that Asia Pacific was the fastest growing region globally for on-chain stablecoin activity, driven preliminary by adoption and trading in remittances. RedOutPay is capitalizing on this shift by integrating Ripple payments. RedOutPay's new Send Crypto, Receive NGN feature tackles these pain points head on. It leverages enterprise-grade blockchain speed and reliability payout infrastructure to offer transparent pricing and near-instant payout, redefining cross-border payments and consumers for low-cost, faster alternative. With payouts typically settled in minutes, the feature currently supports a wide range of cryptocurrencies: USDC, USDT, Bitcoin, ETH, Sol, TON, S, Tron, XRP, BNB, and the future is with Ripple are also supported. We are seeing 10 European banks, including ING, UniCredit, BNP Paribas, have formed a company to launch a Euro-pegged stablecoin in the second half of 2026. What does this all mean? Let me break it down. What these banks are doing, they have created a new Amsterdam-based company called Qualvius. I don't know. This will apply for an electronic money institution license and EMI for the Dutch central bank, so it can issue a fully regulated euro-backed stablecoin across the EU. The stablecoin is targeted for launch in the second half of 2026 and will be backed 1-to-1 by euro-denominated assets, making it functionality digital cash that can move on blockchains but sits inside the existing banking and regulatory perimeter. Banks understand that if they don't come around and get this going, that other innovators around them will do it, and banks do not want to be left out. Banks have evolved with technology over time. Obviously, this move to crypto and blockchain, they could lose a lot of market share. And this is why they need to be very careful on kind of what they allow and what they don't allow going forward. And this is just another step to show us this is where banks are headed. And this is where the vision of the new infrastructure is going to be. Strategic goals for the banks are reduced dependence on US infrastructure and US dollar stablecoins. So right now, 99% of stablecoins are based in US dollar. And so where does that leave the euro and the Great British Pound and the yen and all of these other currencies globally? And so these countries that put out, like these central banks, the most important thing to them is their own currency. And they're going to do anything that they can to work with their banking partners in their countries to offer their own currency in denominated back here. They also want to position themselves as primary providers of wallets, custody, and payment services around the token so that business-to-business payments, corporate treasuries, and cross-border settlements flow through their networks rather than through crypto natives and US fintechs. So this is kind of pushing back against the Ripples and the Stellars of the world, kind of. But I do think in the end, these guys are all going to work together. Leadership and capabilities, they hired Jan Oliver Sell, ex-head of Coinbase Germany and former Binance executive, as CEO. So this is a pretty serious move here by 10 banks in Europe to push this forward. And I will bring you updates on what's going on here with all of this. And so here's HSBC. Max Kenter says markets are setting up for a year-end rally, calling the current dip closer to buy signal than sell signal.
Yeah, thanks for having me. Look, I don't think this December will be awfully different. Actually, when we look at the December Fed meeting, most likely they are going to cut. I don't see really much change from the Fed there, and also in terms of language. So that probably is pretty supportive. But overall, I think perhaps markets and investors have extrapolated a little bit too much of that November sell-off, or should we call it mini correction, particularly around crypto. We've had an awful lot of questions around what this crypto sell-off means for equities, and fundamentally there isn't an awful lot to do really with the broader risk asset spectrum. In fact, what this correction has done in November, it's brought back really a lot of our shorter term positioning signals back towards sort of buy territory. So a lot of short term hedging going on, VIX futures curve, put call ratio, option skews, all of those things really a week ago flashing and still being closer to a buy signal rather than a sell signal. So that really should mean all clear for a year-end rally.
Interesting. So would you be tilting towards risk on here after the rotation we saw in November?
Yeah, absolutely. 100%. So, I mean, we've been saying last week, look, this is exactly the sort of non-fundamental dips that you should actually be hoping for. In reality, you know, when we speak to investors and they say, you know what, yeah, we probably missed the rally a little bit, but we're waiting for the dip and we'll buy the dip. We're buyers of the dips. You know, I think the worst dips are the sort of dips where you say, well, it's perhaps as a reaction to, like we've seen right now, the reporting season, where perhaps, you know, the earnings beat rates are much lower than expected, and then you start to question the fundamentals. Whereas when you look at it this time around, it's sort of, you know, our tech companies, our AI companies that are mostly single A and double A rated, you know, are they issuing already too much debt? That makes fundamentally not a lot of sense. You know, this crypto sell-off, all of this stuff really hasn't made an awful lot of fundamental sense to us.
Well, sounds like there's expected a lot of people expect the market to go up here in December. I think there's a lot of positive news coming out. We didn't have that kind of sell-off here in November, and people are not sure if the market is going up or the market is over. I've seen a lot of people like Raoul Paul say that this is not a 4-year cycle anymore, but a 5-year cycle. With the Fed cutting rates here towards the end of the year, we should get an announcement here within, I think, what is it, like the 10th or 11th? The Fed will probably drop rates 0.25. Some people are even calling for a higher, a lower drop of 0.50 basis points. Is that going to happen? We will see, but cheaper money means that people will be borrowing more to put into risk assets. And I would imagine this will pump the market some going into 2026. But I do think markets are going to have a tailwind in 2026, especially stocks markets with the carry trade unwinding. That is going to play a pivotal role. I've been warning my dad and other family members to be prepared for some type of crash that I do see coming here in the next maybe 6 to 8 months. All right, guys, I'll leave it there. Thank you for being here. I'm Crypto Sensei. I'll see you next time. Aloha.